Safety is more than a good idea. It's the very foundation on which we begin learning skills such as driving a car or flying an airplane. Safety in our finances? Also critical. So for the next 4 minutes, we'll learn how fixed annuities and life insurance contracts are built on safety, the foundation providing all other benefits. Most financial experts consider fixed annuities, life insurance, CDs, and treasuries to be the safest investments. But are annuities FDIC insured? No. Even so, they've got a better track record than the FDIC when it comes to protecting investors, because they're protected by the legal reserve system. Now, with banks, the government, the FDIC, protects depositors, but legal reserve insurance companies protect one another and their investors. With banks, for every dollar you put in, your bank can borrow 9 and lend it out. This works fine with creditworthy borrowers, but trouble starts if a bank gets greedy and starts making risky investments it shouldn't. That happened before the Great Depression and again in 2008. Before we knew it, banks were swimming in debt. Many went under. FDIC insurance was created to prevent a repeat of the Great Depression, and it was a major saving factor in 2008. Even though banks failed, we knew our deposits were insured. But here's the dirty little secret banks don't want known. There's not enough money anywhere to cover all our deposits. Seems FDIC insurance is more psychology than reality. It prevented a run on the banks like we saw in the 30s, but hasn't fixed the real problem of a flawed banking system. The legal reserve system is entirely different, safer, and more solvent for several reasons. Legal reserve life insurance companies can't speculate with your money or loan out more than they take in. They also must comply with a robust system involving covering each other's reserves and insuring one another and many of each other's products. And there's more. Every year, every legal reserve life insurance company gets what amounts to an annual physical, only it's financial, from at least one regulatory body for every state they do business in. If a company fails its financial physical, say their reserves are low, they can be forced to stop operating and selling more policies until they're back in shape. Now, that rarely happens, but if it does, the company can raise additional operating capital, sell its business to another life company, or merge into another financially stable life company. It can't just go under, shut its doors, and say, tough luck. If you're a legal reserve life policyholder, you're covered by safeguards that simply don't exist elsewhere. Pretty neat, huh? Now, we mentioned the legal reserve system has a better track record than the FDIC. It showed this off in the Great Depression, when 9,000 banks ground to a halt, while 99% of all fixed life insurance continued unaffected. The government didn't bail out the banking industry during the Depression. The insurance industry did. The U.S. insurance system is the most secure financial system on earth, has $1 trillion in capitalization, and is more solvent than the U.S. government and U.S. banking system combined. So then, why the perception that annuities are risky? Simple. Not all insurance companies are legal reserve life insurance companies, and not all annuities are covered by the legal reserve system. Fixed annuities are, but variable annuities are not. And you should know variable annuities are almost always the annuities financial advisors and the financial media are discussing when they talk about any type of annuities. So, deal only with legal reserve life insurance companies and purchase only annuity products covered by the legal reserve system. Simple? You bet. Safe? None safer. So relax. To lose any money in a fixed life insurance policy or fixed annuity, 5 events must happen simultaneously. Your insurance company's very safe bond portfolio fails, its surplus fund is depleted, all of its many reinsurance partners' very safe bond portfolios fail, the state reserve fund fails, and there's no company left to merge with. Now, this combination of events has never happened in nearly 200 years of legal reserve system history. Want to know more? Click or call for more information from one of our experienced representatives. Remember, safety first.